Welcome, dear readers. The economic calendar is empty for the US today, and that's why market sentiment today on Wall Street and Forex depends on forecasts, expectations, analysis of the economic data released last week, and the comments of policymakers. You are watching a review of the New York pre-market on April 17 with me, Nedachina. Apart from economic data, Wall Street investors are alert to quarterly reports by leading US companies. The season of corporate records opened with the upbeat results. Almost 30 companies whose shares are tracked in the S&P 500 have already reported on their earnings for the first quarter, and 90% of them reported higher than expected profits per share. All in all, the stock market closed with the optimism on a Friday. No wonder the S&P 500 completed the week with a 0.8% intraday gain. The benchmark index managed to close in the green 4 times in the last 5 weeks. Nevertheless, the market opened on Monday with mixed dynamics. The S&P 500 managed to spike to 4,175 points in the pre-market, while other major indexes are trading quietly. Apparently, investors prefer to play safe amid an uncertain economic outlook and the Federal Reserve's intention to bring inflation down, despite a recession threat. In this context, the S&P 500 are trading at about 4,136 points in the early New York session. The index is consolidating within 4,162 points and 4,176 points, thus suggesting a further bullish bias. The broad profile stock index is gaining ground because investors hope that the Federal Reserve will complete the cycle of rate hikes in the near future, and the rate hike by 25 basis points at the nearest policy meeting in May has been already priced in by market participants. Now, investors are trying to make a longer-term forecast and find the answers to the questions: what's next? And how long? One of the key figures of the Federal Reserve shed light on the second question last week. Christopher Waller, a member of the Federal Reserve Board of Governors, said that interest rates would remain higher for a longer time than markets anticipate. And this week, Chicago Fed President Austin Goolsbee, New York Fed President John Williams, and the Cleveland Fed President Loretta Mester are due to make their comments this week. What exactly does the market expect? The Federal Reserve makes every effort to curb soaring inflation and at the same time do not expose the economy to a severe downturn. It's a challenging goal to strike a good balance. At present, the official funds rate stands at the range of 4.75 to 5%. In the case of another rate hike by a quarter of a percentage point, the key interest rate will be in the range of 5 to 5.25%. According to the FEDWATCH tool, almost 68% of investors expect the US Central Bank to terminate the cycle of monetary tightening in the couple of months. And 21% of investors are betting on another rate hike by 25 basis points. Nearly 11% expect a dovish reversal and some steps to accommodative policy. As most market participants predict a rate hike at the Fed's policy meeting in May, such as the prospects reinforce the bullish outlook for the US dollar. Hence, following a sharp decline on a Friday, the greenback is opening a new trading week with a confident advance across the board. Its index opened higher at 101.80. On a Monday, the index is likely to trade in the intraday corridor between 101.50 and 101.90 with a bullish bias. Let me turn your attention to a spike during today's ascending move. What lies behind this jump? In the introduction, we told you that the economic calendar is almost empty for the US today. Still, the market is trying to puzzle out what policy moves the Federal Reserve will make. For this reason, the market gives a response even to economic data of a secondary importance. And today, the market got to know its way on business conditions in the New York Empire State. The manufacturing PMI came as a pleasant surprise. After a steep drop last month, the index suddenly surged to 10.8 points in April, and the PMI sank to 24.6 in May. Analysts had projected the reading at minus 18 points in April. And the index indicated that the manufacturing sector is again in momentum in the state of New York for the first time in 5 months. The index is the strongest since July of the last year. Remarkably, the economy has not contracted but expanded, and this evidence propelled the US dollar's rally. The Canadian dollar is following the opposite dynamic in the early American session. Lower oil prices are bearish for the commodity-reliant loonie. As a result, the firm US dollar enabled a trend reversal in the USD CAD pair, and the instrument went upward and approached the intraday high at 1.3398. Later on, the greenback dipped and the currency pair declined to 1.3391. Nevertheless, the loonie is giving in to its American rival. The instrument remains in the white corridor formed on a Friday within a 1.3343 and 1.3399, trading with a slight upward bias. Expectations for a rate hike by the US Fed encourage growth of the yields of US Treasuries. In turn, this will boost demand for the US dollar, thus putting pressure on the Canadian dollar. Bitcoin opened in the red on Monday, having reached $30,531 at night. The flagship crypto fell to 30,307 and in the midday took a nosedive and tumbled below the landmark level of 30,000. Later on, the token fell again and consolidated in the corridor between 29,232 and 30,312 with a bearish bias. And the crypto had been asserting its strength amid the growing likelihood of the Fed's pause and monetary tightening in the nearest months. Indeed, the US Central Bank could have followed suit and hit a pause button like other regulators. For example, the central banks of Canada, Australia, and others have already suspended the cycle of rate hikes. This move of the Federal Reserve would give a fresh impetus for risky assets, namely stocks and the cryptocurrencies. However, the stronger than expected manufacturing PMI for one state only landed a punch of a Bitcoin and pushed its price downward. Keep close tabs on red-hot news and the analytics for currency and stock markets on the InstaForex TV channel. We wish you good luck in your trading and see you online tomorrow.